Hi, and thank you for joining on today's video. Today I'll explain the basics of an IOLTA or trust account. We'll go over what is an IOLTA and what is it used for. How do you properly account and maintain these funds? And lastly, what to do when there are discrepancies and errors. An interest on lawyer's trust account, for short known as IOLTA, is a specialized type of trust account used by law firms and attorneys to hold client funds that are not immediately earned or disbursed. Money in this accounts are typically funds that are being held for clients as part of legal matters, such as settlements, retainers, or money awaiting distribution for services rendered. Instead of letting these funds sit in a regular bank account, attorneys are required to place them in an IOLTA account. The interest accrued on these accounts is then directed to support charitable causes or legal aid programs, as mandated by state regulations. In order to ensure that proper accounting is maintained in an IOLTA, a three-way trust reconciliation needs to be performed on a month-to-month basis. A three-way trust reconciliation is a detailed and systematic process that law firms and attorneys use to ensure the accuracy and consistency of their financial records related to trust accounts. This reconciliation involves comparing three sets of records to confirm that they are all in agreement. The law firm's internal accounting records, which includes detailed records of all transactions involving the IOLTA account, such as deposits, withdrawals, and interest earned. The bank's records, which refers to the bank statements that show the actual account activity, including deposits, withdrawals, and interest credited. And the individual client ledger balances. Attorneys must keep separate records for each client, detailing the amount of funds held on their behalf. This information is typically kept on a practice management software. These records need to match the amounts recorded in both the firm's records and the bank's records. If there are discrepancies, it's crucial to investigate and resolve them immediately, as they could indicate errors, fraud, or mismanagement of client funds. When a discrepancy is found, there are several steps to take. Carefully examine each transaction recorded in the firm's records, bank statements, and client ledger balances to identify any inconsistencies. Double-check calculations, transaction dates, and descriptions to ensure they match across all records. Trace the path of each transaction, from the initial entry in the firm's records to the bank statement and the corresponding client ledger. If the discrepancy is related to the bank's records, contact the bank to resolve the issue and request clarification on any discrepancies. Review your firm's accounting practices to ensure there are no data entry errors or mistakes in recording transactions. If the discrepancy involves client funds, promptly notify the clients involved and explain the situation. Provide accurate and transparent information to maintain trust. Keep detailed records of your reconciliation process, including your findings, actions taken, and communications with clients and with the bank. Lastly, once the cause of the discrepancy is identified, take the necessary steps to correct the error and put measures in place to prevent similar issues in the future. This might involve improving internal controls, training staff, or refining accounting procedures. Now, this seems like a lot of work. And it is. But not to worry, because you have Carlos on your side to support you with any trust accounting topics. If you're a firm owner and would like to learn about black and white bookkeeping services, head to www.blackwhitebookkeeping.com. And also, don't forget to hit the like button and subscribe to get notified on upcoming videos about accounting tips and more information, like the one in this video. Comment down below if you have suggestions on other topics you'd like to learn. Thank you for watching, and until next time.